Jason, good evening. How are you?
All's good. How are you?
All's good. Things are great. Fantastic. Hey, I want to talk today about something that is really, really important for most financial plans is the risk plan, right? So we talk about, or in essence, most people think about financial planning as my investments, my stocks, my bonds, but it really does come down to the risk portion, Jason, of a plan. And if you think about most of our clients that come in here or new clients coming in here, when you talk about risk, they talk about their life insurance. They all have life insurance in play. They talk about maybe their disability insurance through work. They've got a group plan. They've got a couple thousand a month if they get disabled. They talk about their health and dental plan. But what they don't talk about, and what's forgotten in most cases, is most people don't have a critical illness insurance policy. So let me give the viewer and the listener a little bit of background here. So in Canada right now, there's a much greater chance, Jason, that those between the ages of 30 and 65 are going to experience a life-altering illness, rather than dying. So most individuals have done a great job, in our opinion, of putting in place some insurance and putting in place some disability. But if something happened to them from a serious illness, a cancer, a heart attack, they're going to be behind the eight ball. And you know what? Back in 1996, this is when it first came out. So back in 1996, there was a new insurance product coming to Canada, and it was called Critical Illness Insurance, CI insurance. And actually, it is the number one insurance around the world. It leads the way in places like Great Britain and around the world. But again, most Canadians, Jason, and I'm sure you see it too in practice, is a lot of our clients, when we ask them about their insurance portfolio, they just don't even talk about this.
They don't
the
think
CI
about
type
it.
policy.
Yeah, they don't think about it. But most of us, obviously as you get older, most of us know somebody that's been through one of these major issues.
Yeah. Well, it's funny because I got a chart here, which is amazing, right? So this chart talks about the risk of having a critical illness or dying, right, before the ages of 65. So here's some basic stats here, which is kind of alarming, actually. So if you were 40 years old today and you're a male, there's a 23% probability chance that you could have a critical illness before the age of 65, but you only have an 8% chance of dying. So, if you're 40 years old, there's a 3-time greater probability that you could have a serious critical illness event as opposed to dying. If you're a female at the age of 40, there's an 18% probability, 18% chance. I mean, that's a big number, right? Yeah. 18 in 100 people, 40 years of age or older, before 65 are going to have a critical health condition. And the odds of dying of a female 40 years old is around 6% before age 65. So, it's one of those things where we think to ourselves, we're insuring our lives, which is really important. We should do that for our families, but also too, we should have a living benefit plan for us.
Yeah, exactly. And the good thing about medical advances today have certainly increased the survival rates. So, obviously death is final, but when it comes to these critical illnesses, there's a really good chance now that you're going to survive. However, you've got some financial issues to deal with in most cases.
Right. And Jason, you know what? We've talked about these before here. There's about 20, 25 different illnesses. So when a person goes out and applies for a critical illness policy, they talk to their advisor. There's a bunch of things that are covered that most folks don't even know about. So what are those?
So some of the illnesses that are part of these contracts. So if you have a heart attack, if you have cancer, a stroke, coronary bypass surgery, multiple sclerosis, Parkinson's, Alzheimer's, blindness, some major organ transplants. There's a lot more illnesses that can be covered under these plans. And
the most common claims for those that have these types of policies is 67% of all claims. So if there was 100 claims from the insurance company, 67% of them are from cancer, 13% are from heart attacks, 5% are from strokes. And, I was out a few weeks ago talking to a couple of friends at dinner one night, and we were just talking around the table, and it was shocking that I think half of us at the table at some point have had cancer. Now, some mild, some more serious, right? But it's incredible because I think the challenge is with most investors or most clients is when you buy life insurance, it's a very low probability. The premiums are relatively low. But this type of product, the older you get, it's a much more expensive type of a contract, right? So one of the things I talk about with a lot of our clients is when you're in your early 20s, it's a great time to get this type of coverage.
For sure. And, so basically it's a one-time lump sum payment that you'll get from critical illness protection. And people ask, well, what can I do with that payout? So there's lots of things. You basically can do whatever you want with it. Maybe you want to go to down to the States, or go and just find some of the world-class medical attention. It might not be in Canada. You might be able to find something somewhere else, and you're going to need to put a down payment down. You can provide, of course, income replacement. If there's any issues about having to go and do chemo, you might have to take some time off of work, so this will obviously replace some income. Pay off debts, retirement planning. You can basically, again, you can do whatever you want. You can take the kids on a cruise if you just say, look, I think I can manage this. So again, it's up to you to decide how you use the payout.
Well, it's ironic. When I was about 34 years old, I had met a person who had cancer, my age, young family, dying of cancer. Didn't want to use his RSPs, didn't want to go get treatment. He said, I'm not going to use my money, because if I use my money and it doesn't work out, my wife doesn't have me and doesn't have the money, right? So he said, I'll suffer and I'll sacrifice my life. I ended up going home that day, and this is back 25 years ago. Ended up buying a policy for myself, and I said to myself, I don't plan on having cancer or having a heart attack or anything, but I thought, you know what, it's relatively inexpensive. It was about $2 a day, $60 a month for a $200,000 policy. And I said to myself, if I ever got cancer, I wanted to have enough money to have maybe a year's worth of income replacement, and have enough money to go out and source out the greatest treatment around the world. And then, within 12 to 14 years of having that contract, I had a claim, right? So I didn't expect that, but I got the money in on the claim, had the illness, got it diagnosed, had the biopsy done. 30 days later, they paid the claim. I was only off work for a week, had no need to use it for anything other than that. And I took the money and put it aside for my future, right? So it really does work. Some basic facts here too. If you look at this from Canadians' perspective, 1 in 3 Canadians over their lifetime will develop cancer. We know that. 1 in 9 females are going to get breast cancer. That's a fact. 1 in 8 men, which is scary, right? 1 in 8 men are going to have prostate cancer. 75,000 Canadians will experience a heart attack this year. 50% are under the age of 50. You've got 40 to 50,000 Canadians will have a stroke this year. And of those, 60% of those will suffer a long-term disability. So these are things that are coming, and it's great to plan for it.
Yeah, and that's the bad news, but there is some good news. Good news is obviously that early detection allows us to survive these illnesses. Medical advances today are remarkable. A 5-year survival rate for men with prostate cancer is 87%. For women with breast cancer, it's 82%. Yeah. 20 years ago, it was probably half that. Exactly. 80% of all heart attack victims survive, and 85% of stroke victims survive. Right. The problem is that they might be in they might have a financial burden. Right. After that illness. And
the other thing too is that you think about today, a lot of people today are entrepreneurial, they're running their own business, they get sick, they need to go to work, right? The rent doesn't stop coming in, or the bills don't stop coming in. So it's a great product. It's highly advisable on our end. Again, you can buy these types of contracts. You can buy them in a $25,000 benefit amount. You can buy as high as, as $2 to $3 million. Buy whatever you can afford. You can buy a low-cost term type product. You can also buy a product that has a much more comprehensive payout and option down the road to lock in your premium. So again, for those out there, talk to the advisor you work with, talk to us, and we'd be more than happy to run some numbers and make sure that, again, you've at least been offered this when it comes to your overall wealth plan. So hopefully people can use this, Jason, and get some value from the topic.
Agreed.
Have a great night. Thanks again for coming in.